Okay, now, is it a fintech? Is it a bank? It's both, actually. Feted by Fast Company as one of the top 5 fintechs to watch, and the winner of the Lendit Conference's most innovative bank for 2 years running. We're delighted to welcome to the stage Cross River Bank founder, president, and CEO, Gilles Gade.
Thank you. Hi, everybody. Can everybody hear me? Okay. The thingy is here. There we go. So I'm really, really happy to be in Tel Aviv. My heart is here in Israel. I just want to level set. First and foremost, I would like to welcome all our developers who are from Yerushalayim, from Jerusalem. They're in the audience, and it's really a pleasure to have you guys and to share the platform. So I'm not alone here. We have an entire team that is in the audience, and it's really comforting to know that we have a team here in Israel doing the right thing in development. So banking as a platform, this is really a token term that we've been utilizing for the past few months now. We're going to try to get into it a little bit and explain what that means. So what do we have? The foundations of Cross River Bank. Cross River Bank actually was born exactly to the day 10 years ago. June 23, so today was the 24th, but it's a day later, but actually we're still on the 23rd in the United States, right? So June 23rd, 2008. In the middle of a banking debacle, we were looking for decent asset classes to invest in because obviously nobody wanted to deploy their capital into loans. We had fresh capital, about 9.3 million, and just think about it for a second. 10 years ago, we had about 7 employees, 9.3 million of capital to play with. What are we going to do with it? So we tried to diversify as much as we could, and first we got into lending. We deployed into classic assets, whether it's commercial real estate, a little bit of residential loans, but also we participated in a program called the TALF program, whereby the U.S. government lends money to investors in SBA pools, AAA securities that are very, very safe, just to reignite the liquidity in the market. We participated in that, bought a lot of assets at a steep discount, waited it out, and then sold them at a premium. So what that engendered is that the bank actually managed to turn a profit in its 5th quarter of operation, which really got off to the races. So lending, that was really our root, our basis. Then we moved into something that is third-party loan origination. And that's where you see some of those names here that may sound familiar to you guys, like Affirm, Rocket Loans, which is the Quicken Loan outfit, consumer lending outfit, Marlet Funding, and a couple of others like Upstart, C+, Freedom Plus. So we have about 14 platforms, and we originate marketplace loans. We also retain loans on balance sheet. Just to give you an idea of volume, we're doing roughly about $650 million a month. So we're on a run rate to do about $8 billion this year, and that represents roughly about 3 million loans. So on the 3-year cycle, because those loans typically are at about 36 months average maturity, so that means that we're touching about 9 million lives in the United States, providing access to credit to people. Then very rapidly moved into payments about some 5 years ago. We believed that there was really a lack of strong APIs, connectivity, on the back-end side to connect to the payment rails. And we started with an ACH platform, which we call ACH Manager. And then we moved to an automated wire system, and then push to card, and then we're moving now into RTP, Zelle, all these platforms that you probably heard of from the United States that are basically the differentiating factor between all these platforms is the speed of delivery and obviously the cost as well, and how many banks are on the platform. So what we do pretty well, is to connect through a payment gateway to every single one of those access points to the payment rails. And we are delivering this on the back-end side through our payment gateway in an intelligent manner with AI embedded and with a very strong KYC and AML module to anybody, any corporate that is very high transaction driven. And you have a couple of names here. For example, Coinbase, right? The largest marketplace in the United States for cryptocurrency. TransferWise, which is a company that you guys know, which is probably the leading foreign remittance company in the world. some of the issues that we're trying to resolve is as you guys know, about 10 years ago, there was a serious unbundling of banking services, of financial services, whether it's on the lending side or on the payment side. Now, what we're trying to do, and that's what it means, banking untangled, we're trying to rebundle all these offerings into a unique and a wholesome, comprehensive offering. Because at the end of the day, what all the fintech companies, whether they're on the lending side or the payment side, what they realized is that you still need a bank. You still need access to payment rails. You still need to execute certain transactions under the confine of a banking and regulated institution. Because that provides safe harbor, that provides actually a sense of trust and a sense of security for the consumers transacting and trusting the platforms that are on the front end. But we don't want to touch the consumer. We're not interested in that platform. We don't want to compete with our clients. So we're letting our clients do what they do best. And we come on the back end and provide the solutions that will enable our clients who do have the touch point with the consumers to do their job better, faster, cheaper, and for sure more compliant. So the rise of virtual banks, as you guys know, Chime, Digit, Capital, and then you have obviously other platforms such as payment platforms such as Starbucks, Alipay, as well as Apple Pay, etc. All these platforms need an access point to the banking system, to the banking infrastructure. So in Europe, obviously, it's radically different than the United States. You need to be a bank in order to be on the Visa, MasterCard, Accel, CU24, Pulse, NICE, Star. On all these networks, on all these payment networks, you need to be a bank to be able to have the adequate capital to put capital against some of the transactions because your transactions are at risk for a certain amount of time. That's where we come into play. That's what we do for some of our platforms. As well as, by the way, to some of these neobanks or challenger banks, because they do need, what they're offering again, is a front-end application that is very GUI, very intelligent, very user experience driven. However, on the back end, they have two choices. They could use a traditional bank, and they're going to take care of everything. So in other words, they're going to build the middleware, and they're just asking the transaction bank to provide them access to some of the payment rails. So there are two issues with that. Number one is that they're not going to get access to every single rail, because that's very difficult to do. Number two, if they provide access to the rails, they're not going to have a payment gateway that intelligently routes the transaction towards the right rail for that particular transaction. A little bit like FedEx or UPS at the checkout, right? You want a delivery of goods, and that goods, you want it like, for example, next day because you have a birthday party to celebrate. So you're going to pay for next day air, right? That makes sense. You want an immediate delivery, you're going to pay a lot more. You're going to pay for an Uber, for a taxi ride in order to pick up your goods and then to bring it to your house. So the faster the delivery, naturally, the more costly it is. So how do you build an infrastructure that intelligently routes the transaction based on optimization of price and speed? That's what we have built. Now, from unbundling to rethinking and to rebundling, that's what we engaged ourselves into for the past 2 years. Let me give you a user case. So we have, like for example, Coinbase. So Coinbase has an issue with regards to reconciliation of accounts. So what Coinbase does is that they send us an ACH file that may have, 20,000 transactions for that day. And that ACH file, we're going to pull the money into one master account for Coinbase. Then Coinbase has to go into that master account and reconcile every single one of those accounts and make sure that the wallet of the consumers is going to be rightly populated. Then so all this is done, by the way, quasi-manually. What we built on the infrastructure side for Coinbase is the ability to create immediately and instantly, as soon as we get an ACH ping, we're creating a sub-account, a virtual account for that consumer. Now, when the money comes in, it's automatically reconciled because that money stays at the consumer level. So now we're rebundling all these consumer accounts and providing one statement to Coinbase saying these are the monies that we are actually got, and it's very easy for Coinbase to automatically reconcile those accounts and populate, thereby, the crypto asset wallet of the consumers. These are some of the solutions that we're offering to the market. Now, the phenomenon that has been happening, and this is where we're getting from bank as a service, so here this is one service, ACH, that we're providing, to bank as a platform. And what we're talking about here is actually most of the ecosystem on the fintech side. What is happening is that the lending folks, they're trying to get into payments because they want to increase stickiness to the consumers, right? So imagine you're a marketplace lender. Now you want a virtual account being created. Instead of having to disburse the funds and then you don't see the funds, you have no stickiness with that consumer. They're basically shopping around. Imagine if we created a virtual account for that consumer, and now it becomes a transaction account away from that account and towards whatever they want to do with it, whether it's to buy goods, to repay a credit card, to pay off student loans, or whatever the case may be. So a lot of the lending folks want to get into payments. And the same holds true to the payment folks. They want to get into lending because they also want to increase stickiness. They will also want to offer, like an Uber, for example. Imagine the value prop. When you have an Uber driver, right, who wants to get paid in real time, but instead of the money going away to their account, because that's what we've been doing, for example, on the push to card, so we're pushing money in real time on a debit card, leave the money at Cross River in a virtual account, and then from that account you can actually transact. And guess what? I'm also going to give you, based on alternative underwriting, based on your driving record, based on how many stars you've got on your Uber record, I'm going to provide you with a loan, whether it's a $500 loan, $750 or $1,000, or whatever the case may be. Imagine how much stickier that account suddenly becomes. So this is what we're talking about as banking as a platform, all intelligently combined into one ecosystem, animated by AI, and facilitated by blockchain. I know I'm using a lot of keywords, but I only have 3 minutes and 14 seconds. So if you want to talk offline, I'll be more than happy to do that. By the way, just a quick wrap up on capital. We raised venture money. We're the first bank to raise venture money for the past 20 years in the United States. That was about 2 years ago. We raised money from Battery Ventures, which is headquartered in Herzliya. We raised money from Ribbit Capital in Palo Alto, as well as Andreessen Horowitz, which is in San Mateo. We also raised about $27 million of debt about 2 months ago from various banks in the United States. And we're in the market to raise another round of $100 million, which will be hopefully our pre-IPO round. We're planning to go IPO circa 2020. With that said, again, it's been a pleasure to be here. I'll take maybe 1 or 2 questions. We have 2 minutes left.
If you're going to ask a question, please keep it short and not like a speech of a question. Thank you. And if we can get hand mics into the audience for the people asking questions.
Michal wants to ask a question, by the way. Do we want to work with Pepper in the United States? Absolutely, anytime you want.
My question is, how do you purchase the big ones? Google, Amazon, not the fintech side.
So by the way, we settle Google Wallet transactions. We've been doing that for the past 4 years now, 3 years. So that means that if you want to populate your Google Wallet account from your native account, whether it be B of A, Chase, Wells Fargo, Citi, etc., so we're going to use a technology called push to card or MasterCard Send or Visa Direct through our gateway. So these are some of the services that we provide. So you're 100% right. I mean, all these wallets, services companies, or ride-share companies, or gig economy companies, they all want to increase the stickiness by offering payment solutions that are very ubiquitous with the offering of those platforms. Maybe one more, 1 minute left. I'm sorry?
Gilles, we've got a microphone. 1 second.
Yeah, use the...
There's a microphone.
Good morning. What Israeli companies do you serve?
None. Guys, I'm open for business. Let's get it done. Thank you very much. Have a good day.
Thank you, Gilles, CEO and founder and president of Cross River Bank. You can go off that side as well, it's fine.